VINCENZO'S committed to standing on the front lines of the cryptocurrency and blockchain technology fight for truth and integrity. Empowering the retail trader requires just one subscription, one share, and one comment down below. Each Jabroni Killer membership at $2.99 a month builds the army of truth, block by block. I say this with peace and love. See, yes, the criminals. Yes, gangsters, si cartel. Yes, the gangsters manipulating the cryptocurrency market. Walk away. Yes, we see retail traders hard-earned ducking. Yes, your money's good day, sir.
Good industry exclusive 5th day of April, if you can believe this already, marching our way steadily through the first month of spring on this overcast, gloomy, just as the cryptocurrency market's been, cloudy, dreary, and drizzly, seasonably cool. 38 degrees, J. In the greater Bloomington metropolitan area in central Illinois. And just as that dynamite intro said, bell notification, comment down below, subscribe and share to get that #1 industry exclusive cryptocurrency and XRP insider built on truth and integrity you can find here. And we got this beautiful chart and a lot of news, and this is going to be a fast-paced video this evening. We have the Bitcoin price here, but before we go into the Bitcoin price, this is a gold and silver bullion, and you have to learn the minds of the market. And once you learn the minds of the market, you can become a master of hodling, buying a stock that's a good company or a crypto or a mining stock or Apple or whatever, and learning how to facilitate that into long-term capital gains, compounding dividend payments, and you, over the years, exponentially increase your portfolio. And you got to learn to counter trade the emotions of the average retail trader and the average majority of traders. Like here, FOMO gives way to fear. Look how quickly FOMO gives way to fear. All the people, and you say, who is fearing after the FOMO? The people that are fearing after the FOMO are the FOMOers, the people that bought in, the people that believed the hype, the people that sat on the sidelines during a 2-year bear market because they were too scared to put in some money into, into crypto, and they watched the cryptocurrency prices crash, and they sat there on the sidelines doing nothing, buying nothing, accumulate zilch, zip, nada. And now as the price skyrocketed 200-300%, and they've seen a smaller market cap altcoins go up 400, 500, 600%, they bought into hype, they bought into top, they bought into blow off euphoria after sitting on the sidelines for better than or more than or greater than 24 months. And that's unacceptable if you're trying to invest, trying to enhance your portfolio, and trying to increase the quality of life and standard of living for you and your family by sitting on the sidelines and being too scared to do anything about it. Bitcoin price index lost 1.48%. This weekend could see Bitcoin break 70,000, but just how easy the FOMO, and that's what dictates the markets in the short term, why people get slaughtered, whether they put in a bunch of money. And here's a key to trading, and here's a key to investing, and here's a key to long-term hodling. If you're concerned about a short-term fluctuation to the downside after initially buying a position, that means you bought too much of that position and you are wagering too much money and too much risk. If you're concerned about a day-to-day fluctuation in price and a number on a computer screen being green or red versus where that underlying asset that you bought is going to be in 3, 5, 8, 9, 10 years from now, because you're scared because you bought it and now it says you're down 10 or 15% or 20% in the first couple of weeks because it was on a downturn, right? That means you invested too much money. You have too much risk for the capital that you have, and the allocation in that position is too great, and you should be downsizing immediately until you're comfortable enough not to even look at the position for months. And then you just peek on it to see how it's doing, whether you're up, down, indifferent, and then you're deciding whether you are going to buy more of that position or just let it sit there and continue to do what you think it's going to do. And that is a key to investing. If you are worried about the price day to day, if you're going down and it makes you want to sell and get nervous, and you can't stop looking at your phone, you can't sleep, you can't eat, you can't drink, you can't smoke, you can't do anything, that means you have too much money. That have done good, some that have done bad. But here's what I say: don't be scared, just buy when it's down, and buy more. If it goes lower after you own it, hold, wait, repeat, wait, pray a bit, hold, wait, and cash out after all that. And cryptocurrencies and XRP and the algos and the H bars and the EMPs and the Shiba coins and the XDCs of the world. And we've had some people see, and that is what we're going to talk about here in between some of the nonsense. Let's go to the comments. Let's just see all of them because they were here somewhere. I used to trade, blah, blah, blah. Thank you, all you people, for commenting. Dave Chappelle, Vincenzo AMP. We're going to talk about that. XRP purple. We're going to go look at some AMP for you right now. The graph and AMP is your favorite. So we'll look at the graph and AMP and we'll talk about the outlook. Actually, we'll just go to that right now. And pump. And we did make a trade on that. That way back in the, not way back, but back here when the cryptos were still pumping for that week. We bought it. I don't remember the exact price. It was somewhere before it made a huge pump. And then literally about a week later, it went up about, 200%, but I was up about 160 something percent. It's right in there somewhere. It's like fucking right when everything was going off. And then this thing had to blow off top right here on like March 11th, right up in here. See that? We'll get our industry exclusive drawing tool. Had to blow off top and now it's consolidating. And it came up to a major moving average, which is the 100-day moving average in the weekly time frame. But if we break this down into a smaller time frame, you can see that's a nice consolidation right now. And if you look at what happened last time, we had our initial move after this humongous bear market crippling bottom that fleeced, heisted, and shysted everybody. We had a nice pump, and this was probably about 100% pump. If we take our industry exclusive YouTube made famous drawing tool from near the bottom to near the top, about a 219.69% unofficially. Then we had a nice consolidation and a down and sideways consolidation and brief technical analysis, XRP purple, something that's a trading rule to me, a trading rule to you, a trading rule to all, is after a pump like this, right, not even looking at the volume, but if we want to zoom in because the volume is critical, but there's not a lot of volume in here, but we zoomed in enough, you can sort of see down here from the pump, get out of there. You can sort of see down here from the pump, we had a slight volume increase and you see it peak right there. See them little candles right in there? You see those? There's like two of them. They look like the former Twin Towers or gold pulse right in between them. See those right there? If you zoom in right above the 17 in December, right? 17th of December. And then we had the volume come down. But after you get a nice big pump like this, right? And we even had a mini one there with a mini consolidation, a down and sideways forming a pennant consolidation with a nice mean running straight through the middle, right? And then we have a nice pump. But after you take this as one big move, you have a nice pump. You have that pumping volume bullish. And then you have descending volume or weakening volume after a big pump and a down and sideways consolidation, forming sort of a flag or a pennant formation. Sometimes they can form like that, like a V-shaped pennant or a duck's beak where it's wide at the end, narrow, wide at the beginning and narrow at the end. Or they can form a down and sideways flag pennant like that. But those are bullish consolidations, and often the buyers or the bulls start to form a base and the sellers or the bears get taken out of the market and the price is going to come up, right? When the sellers get taken out up there. And then you have a targeted move. And look how when technical analysis gets overblown in using, but technical analysis can give you targets or baselines to form where you think price could go. If you take this from the bottom of the move and you can see, hello, I'm pivoting here. I'm like the little duck beak arrow. Hello, old Vincenzo's gold crypto investing, right? And right here, you've at the bottom to the top roughly of the move, the phone's going to die. And then you break it to the point of a breakout, which is where the move started. See, like right there, you had a nice hyper pump. So right about where that started, you put it there and you bring it, and that brings you a targeted move. Did it bring you to the exact top? No. Did it get you very, very close? Yes. Did it tell you it was going to break up? Absolutely not. But did it show you if it did break up where a likely targeted move would be before another consolidation? Oh, absolutely it did. And it did a beautiful job there. And then if you know the pattern here and the probabilities of playing the patterns and the technicals, you would know a pumping price with a pumping volume is bullish. in the in the daily time frame, and then a lengthy down and sideways consolidation along and above the moving averages with a decreasing and leveling off volume is very, very bullish, right? And you add bullish consolidation after a bullish pump with the volume in tandem with bullishness, you would take the probabilities that you would probably have a 7.5 to 7.69 out of 10 chance of breaking to the upside. And that's a very, very good chance, or a very, very good hedge against the market and the retail traders, and giving yourself a distinct advantage over the house, which the house is the market, and the market is people, and people are traders, and traders place bets, and traders win or lose bets, and those win or losses move the money, right? And that's what technicals are really about, and that's what that showed us there, and that is really what I bought that move off of, plus all the hype that was going on, and I thought it had a move, right? But those that didn't sell yet, you didn't have to sell. You're still above the moving averages. Even if you bought down here, this is a phenomenal run right now. I would definitely, if I would have bought down there, I wouldn't have sold yet, right? But because you're above the moving averages, and as long as you're above these moving averages in the daily time frame, you could work a phenomenal, glorious, glowing consolidation just like you had here, right? Just like you had here, and then another smaller one there. You could be working on another one here, and if that broke bullish, right, you would do another targeted move. You can see the move ended about right there, and the move started about right there, right? But I'm going to go from right there after the mini consolidation, right? So we'll go right about where it started to break out, right about to the top of that. And then the point of a breakout would be somewhere down at the moving average. Say it started to pump off of the 50, you can see that would get you right up into here, major, major upper resistance, and that is a huge move. Is that the technical saying it's going to happen? Absolutely not. Is that the technical saying you should buy? No. But that's the technical showing you here how you can sort of telegraph. But now let's see the volume. You can see now we had the same thing, a step up in volume again, and now a nice consolidation in volume with a steeper down and sideways consolidation. But you can see the down and sideways consolidation is more of a like that, right? So that's what you got to look at, but you want to keep above the 200-day moving average in this consolidation, and more so you want to stay above the 100-day in blue, but you want to stay above the 200-day in the daily in green there, or you could be having some sort of a topping out pattern, and then you would be afraid of slipping and doing something like this, and then you come back up into the moving averages and it forces you down because these moving averages start to trend down like that, and that would be the 50, and then the blue would be right underneath it, and then the green, and now you got a bunch of overhead resistance with a bunch of moving averages that are downtrending right here, right? Moving averages that are downtrending, and then they got to try to fight over through it only to get rejected, and then you end up back down here at a local bottom, a local supply zone, a local accumulation zone, and a local battle zone that was formed here on the 17th of November of 2023, right? And then you would have to look at what is this pattern going on here, and you always got to think into the future, right? And what this pattern could be indicating and dictating is that this could have been a left shoulder, this could have been the head, and this could have been a right shoulder and a neckline and a bottoming out pattern for another flush, right? So that's, or a hat, right? That's what's his face? The dude that used to be in the cartoon, the little Mexican guy that used to have the pistols, right, with his hat. It could be his hat right there, right? But that could be a topping out pattern. So that's something you'd want to keep in mind, and we'll keep up there for the time being. But for now, as long as we stay above the 50-day moving average in red, and more specifically the 100-day moving average in green, or the 100-day moving average, in blue, you're still bullish and can still try to come up to this 0.03811 and a big pump to the upside. But if you slipped a 100-day in blue, and then the overhead 50 in red starts to downtrend and cross the 100-day in blue, and now the blue is on top and the red's in the middle and the green's on the bottom, that would be indicative of bearish short-term action, right? So if you want to try to keep this bullish, you got to stay above that moving average in blue right there. and you can try to pump to the upside. In the short term, could I see something off a moving average come up like this and give you like that Batman double top locally in a time frame? Yes. Or you dip all the way down to the 200, then you ferociously pump all the way back up to the double top, and then you decide, do you go down or do you go back up, right? So that's what I could see in there, and that's what I'm looking at.